And with us right now, we've got Danny Naseem. Danny, you are the founder and CEO of A&C Management Group. Thank you so much for joining us.
A pleasure to be with you, Josh.
And Danny, what does A&C Management Group do?
A&C Management is a consultant in the health insurance market. We educate clients, centers of influence like accountants, CFOs, and HR consultants about a new way to do health insurance, a more efficient way to do health insurance, where we are able to take small groups, which are usually companies between 2 to 100, and bring them into the large group market with maybe 80,000, 100,000 people, and they're able to obtain much better health insurance rate in that space.
Yeah. Okay. Well, you got my attention because, as the owner of a small company, so we have about 20 some employees, but they're all independent contractors. But, there's been some instances where, we haven't been able to attract or retain key talent because I can't compete with the big guys that, have these benefits packages. I just don't have the resources to do that. And so it's unfortunate because I have some employees that are like, look, that's my key thing that I need more so than compensation is I need health insurance benefits. And so it's tough, if you're a small business.
Well, I don't think you could have said it better, because the one key area is the area of recruiting. When you have a small company and you're offering one plan, maybe two plans, they're not that great because you're trying to keep the cost up. In the PO market, which stands for Professional Employer Organization, these are companies who basically take small groups and they pool them, small and medium-sized companies, and they're able to give them Fortune 500 benefits like Yahoo, Google, AOL, it was now Facebook, and you're able to offer maybe 5, 6, 10 plans for medical, 3 plans for dental, vision plans, life insurance, disability, everything that you see in a Fortune 500 company. So by scaling up, where you have a company of 10 or 20 or 30 people, and now they're combined with 100,000 people in that space, they're able to offer and leverage benefits, for your company with the rest of their pool of companies. So it's the wave of the future. I mean, they also, within that space, they offer things like HR services, human resource services, compliance, retirement. And so they offer payroll. And basically these companies use their payroll tax ID number to be able to write a master policy for all the companies that they pool together. So they might have 60, 70,000 worksite employees from maybe hundreds of companies. And the payroll that you're doing with them is able to give them an opportunity to obtain benefits that you really don't see in a small group.
Okay. So naturally my brain goes to, okay, so how can I do this? How much is it going to cost? Can I afford to do this? It actually, it drives me crazy. First off, number one, that I think it's just ridiculous that benefits are attached to employment today. It doesn't make any sense to me. I'm sure you know a little bit about that. First off, why is that the case? Why is it that, that homeowners insurance you buy on your own, but health insurance, for whatever reason, that's something you get from your employer?
Yeah, because the problem is that the reason it's gotten by the employer, it's more of the reason also that the insurance companies really don't want to sell policies to individual because there's too much of a risk in case somebody gets sick. So there's not enough sharing of the risk. If you're selling through the corporate structure, and Aetna or Blue Cross insures 30 people, if 1 or 2 people have claims, they still have the premiums from the other 28 people to counterbalance that. But if you're one person buying insurance directly, what happens is, and you could see that with the exchange, the problems they're having, where all these insurance companies came into these state exchanges and then they all started leaving because there's just too much risk. Now, I'm not saying it's good or bad. I'm just saying they look at it as a business, and the corporate market also is where, the employee can get the tax deduction, for, your benefit. And listen, you mentioned something before about recruiting. I think that recruiting is a big issue these days. If you want to attract good talent, the first thing people are going to say is, what type of benefits do you have? Do you have a 401k?
Yeah.
Do you have a choice of good benefits? How much do I have to pay for my benefits? So when you can offer these plans at 20, 30%, a lot of times less than what you're paying now, it's a big difference. I mean, if you're a single in New York, you're paying over $1,000 a family. I'm sorry, $1,000 a single for an individual plan that's decent. Here, you can maybe get it for $700 a month instead of $1,000 a month. That's a $3,600 difference on a single, and families could be $7,000, $8,000, $9,000 difference because you're buying it as a large group instead of a small group.
Yeah. Danny, just, again, from a history lesson, I think it's interesting. My understanding is that, that health insurance, again, the fact that it got roped into part of compensation was kind of a post-World War II thing, or at some point, employers, because from a tax advantage, said, well, wait a minute, if we give this, then there was some benefit for employers, right? Do you know that side of it? Yeah,
I mean, most of the employers, make it as part of a compensation package because obviously they get the full deduction. Also, when an employee takes when the employee pays for their benefit, they don't have to pay the FICA because it's done pre-tax by the employee, so there's no FICA match, which is an advantage. But yeah, employers now make it part of a benefit package. So sometimes if they pay more in premiums, they'll actually make the compensation a little bit lower.
Here it is right here. So to combat inflation, the 1942 Stabilization Act was passed, designed to limit employers' freedom to raise wages and thus to compete on the basis of pay for scarce workers. The actual result of the act was that employers began to offer health benefits as incentives instead. So government meddling.
Listen, they're always meddling. It's, the one thing that's interesting is, the government always talked about, trying to pool things. So, they used to have their association plans, like the AICPA, the law firms, but the problem was as the people entered it and the prices went up, the healthier people left for greener pastures. So those things collapsed. With these POs, there is some type of underwriting. So, I mean, if you're a company whose average age is probably on the health insurance 45 years or less as an average, you're going to do very well. I ask people 3 questions usually when I speak to them. 1, what's the average age of the people on your health insurance within 5 years? 30 to 35, 40 to 45, 25 to 30. Usually demographics, men to women. That's usually a question. And then usually one of the other questions is anybody out on disability because of any major illnesses, because you would know that if you're an employer. If the questions are answered in the positive to all 3, it is amazing the power of the professional employer organizations to your company rates. I have a company in Colorado right now. I'm saving them 75 people. I'm saving them $238,000 a year.
Now, okay, so Danny, so let's say that I've got, myself, I've got maybe 2 other W-2 employees, and then the rest are all 1099 independent contractors.
Sure.
And so I wanted to look at this. Now, if I go on the open market, I could just tell you this firsthand. So prior to the exchanges, we were paying about $650 a month. My family's generally pretty healthy for the 5 of us. Kind of flash forward again, no judgment on it. These are just facts. We got kicked off our plan and said, sorry, you got to go to the open market now. We did that, through Obamacare, and my rate went up to $1,200 overnight. And then 3 months after that, it went up to $1,700. Wow. So, basically, in the span of like 3 months, my rate went up $1,000 a month. Wow. And that's a lot of money for my family. And so, we're on a health sharing plan right now, which isn't perfect. But if we were to look at having a company provide, more traditional health insurance, how much do you think we'd end up paying? Like if just like 3 employees.
So usually if, again, it depends on demographics, how old the other employees are. So are you talking about the open market, or are you talking about a professional employee organization?
Yeah, we're all, we're probably all in our 40s.
Okay. So I think that a family would probably be between maybe 1,500 to 1,800 for a good plan, a really good plan. Yeah. Usually I would say that for the better plans within a professional employer organization, it's somewhere between, I would say, 1,500 and 1,900. If you buy it in the open market in New York, those same plans, you're probably looking at between 2,100 to 3,000 a month.
Good God.
It's unbelievable. And I think that,
how does someone do this?
You know what? You join a good employer who pays a good percentage. Look, I will tell you, people, when they come in for jobs, and especially in the management, they negotiate this with their employer, because some employers will pay for a single, but they won't really pay too much for the family. If somebody comes in with a family, they say, you know what, I can't afford $20,000 a year in my compensation going towards health insurance. The other things with these professional employee organizations, they have such a wide band and such a range of plans that your lowest plan can cost maybe $450 a single, and the highest band can cost $1,000. So if I'm a healthy young individual, and let's say the company gives me $450 towards my health insurance, or $500, I might just take the lower plan, because I say, you know what, I have no expense out of my pocket. So I think the choice of the band of plans that you can be offered is kind of a big thing for people coming in, especially with families.
Yeah. Wow. Okay. So, so who's kind of an ideal client for you?
I would say usually people in the space between 10 to 150 employees, because most of these professional employer organizations, I deal with 8 out of 10 of the largest in the United States. And the one advantage I started looking at this about 14, 15 years ago. And it's kind of a funny story, because I didn't even know what a PEO was. I kind of re-hooked up with a guy who actually came to my wedding about 30 years ago. I used to play softball with him. And he says he opened a company called Professional Employer Organization. And I said, what the hell is that? And he tried to explain it to me. And I said, you know what, I'm not really very interested in it. It's not accepted in the Northeast. And then about a month later, I went to a very large client of mine, an accounting firm, and I did the renewal for them. And when it was over, the woman said to me, we'd like to thank you for your service. And that's usually a very bad tell when somebody says that to me. And I was thinking, I showed her everything I can imagine in the open market. And I said, what could you possibly be taking? And she goes, we heard about this concept called Professional Employer Organization, and we were presented with it and were very impressed. Now, this was 13, 14 years ago, when it was really not heard about in New York. And I said, you know what, it's a coincidence, but a very good friend of mine owns a company in this space. And would you mind if I quote it for you? So I went with my head between my tails after I blew my friend off and said, hey, Andy, do you mind showing me what you're all about? And if you could give me good rates and a good service for this client and I could keep it, I will learn about this model. And if I think it's good, you will get a tremendous amount of business. I retained a client from 14 years ago, and I learned about this business, and I said to myself, just from a risk reward standpoint, if you can get your medical at a 30% or 20% discount, and you do pay administration, because you asked me before, what's the cost? They charge a cost per employee, $80 a month, $90 a month, to obtain the services of the HR, the compliance, the retirement planning. But think about it this way. I basically say, okay, if you have to pay $80 to $90 a month, and you're already paying for payroll right now, which is included,
Yeah.
and you're saving $200 or $300 on your health insurance, that more than offsets the administration costs they charge. So when I see a client, I say, what are you paying in payroll? What are you paying for your medical cost? I take a look at these PEOs and say, what are you paying for the administration cost and what are you paying for their medical cost? If it's lower, then it's definitely something to have a discussion on. So it's kind of the wave of the future. I really see this as the wave of the future. It's very popular in California and Florida, and now it's come to pretty much all of the United States.
Wow. So what's the best way for an employer to shop around for a PEO?
They usually should come to a consultant that really knows what they're doing, because every PEO has their own structure. Some PEOs use, and I hate to say this, they use fuzzy math when they do the proposal. I was an accountant. I eliminate the fuzzy. A good consultant can eliminate the fuzzy math. So you really know what you're paying for. The other thing is that by going to a very good consultant can play the PEOs against each other. Which means I can go to the president of one PEO and say the president of another PEO is giving me a much better rate. And these people have pride and egos. They always want to beat the other head of the other PEO. So they will do some concessions. For you. And you can really understand also the market, because some PEOs are blue collar, some PEOs service the white collar area. So it's really understanding the market and where to go. So a good consultant really can help. I mean, you can go directly to the PEOs. I don't think you're going to get the best rates. If you go to a consultant who really knows what they're doing, I think you get a much more competitive structure. Plus, you get a 360 view of all the PEOs out there, so you'll really know which is the best for you as a client.
Right. Yeah, I've gone to like the Inc. 5000 conferences, and I always see like the Insperities and all the other ones. Who are some of the other big PEO companies that folks
so
might?
Insperity is really big. Insperity is they usually have really good rates, but their administration costs are the most expensive in the market. They might be charging $200 a month per employee. Good ones are Insperity, Venture, Prestige, Engage, Extensis, a company called JustWorks. These are all of the big POs out there. I'm not a fan of the payroll service POs like ADP and Paychex. I think they do a good job in payroll. I think their service model maybe is not as strong on the PO model. So
it's like a seafood restaurant that sells burgers. It's
exactly.
Stick with when you're at the seafood restaurant. Just go ahead and get the seafood.
I like PEOs who started off as PEOs. I like PEOs who started off 25 years ago, have a good track record, and have a consistency with the renewals year by year. So those are some of the really good companies. I've done due diligence on these companies for 15 years. So I kind of now know, where it lies. A good consultant should know where the best fit is for the clients.
Yeah. All right. So Danny Naseem, again, your website is ACM. Well, it's ACM. ACMGMT. So AC Management, ACMGMT.com. And when folks go there, what should they look for?
I think they should look for, my sons, A&C is after my sons, Adam and Corey. So they actually did a really nice animated video.
I'm looking at it,
Yeah, and it really explains what a PEO is about. It's like a 2-minute animated video they put together, and it's really cool. So it kind of explains, if you go into the PEO section, there's kind of a lot of educational material. And then I just did an interview with Yahoo Finance, where they interviewed me, and I really explained, what a PEO is about, the value it can bring to clients. I think this is the wave of the future. I mean, 25 years ago, 30 years ago, when I went to the business, I was always trying to look for the next big thing. So it was the high deductible plans, and now it's the PEOs.
Yeah, it's frustrating being a business owner today, particularly a small business owner. It's just, from my experience, it's, the system really has not been designed very well for SMBs. And it's really frustrating. So Danny, I hope that, PEOs continue to evolve, costs continue to drop, that we've got that, strength in, so that small businesses can kind of experience that strength in numbers. That makes a lot of sense. Yes. And so it'll be interesting. Any predictions? I mean, who knows, right? With 2020, 2021, the elections, that sort of thing. Any predictions on where you think we're headed?
Well, I think that I think if Trump wins, things are going to stay as is. I think they're going to keep the Obamacare just for the people who need the subsidies and everything else. And I think that's a fine thing. I don't have a problem with that.
Right.
I think that, the idea is to bring down, the prices of prescriptions. I think that's where you're having a lot of the cost. But I think it's going to be the PEOs. I think the more that you can have strength in numbers. When you have PEOs that have 300,000 people, with a contract with Blue Cross Blue Shield or Oxford, they just get much better rates. And so I think the small businesses can really have an opportunity to leverage their health benefit rates if they are a good fit for the PEO program. I think really that's kind of where they get their best value these days. So I think these groupings or associations that they're looking to bring kind of at the best opportunity. I don't think it's going to social medicine because we still have the best healthcare. I've lived in Israel. I've been to England and, been to Canada, and you do have to wait a little bit sometimes before you get care. So it is expensive, which is a downside, but it's great care and you can go for surgery whenever you choose to. So.
All right, Danny Naseem, again, your website, A&C Management, on the web at acmgmt.com. Danny, thanks so much for joining us.
Josh, it was such a pleasure. I'm happy to have talked to you.